Let's talk a little bit more about the health of this recovery, because as we were just discussing, I mean, unemployment's one metric to be looking at here, but we also got the update in terms of Americans' income for the month of August, falling by the most in 3 months after we saw the first clip here reported after those July 31st benefits expire, the additional $600 coming in unemployment claims at the federal level. And that 2.7% decrease in personal incomes came after we saw an upwardly revised 0.5% gain the month prior, according to Commerce Department data. So let's discuss how the consumer overall here in the U.S. is holding up with our next guest. George Seay is Annandale Capital CEO, and he joins us right now. And George, I mean, putting these things together, you just heard the update on the unemployment front there from Emily. Of course, tomorrow we're going to get the big jobs number for the month of September. But as you put these data points together, what are you seeing in terms of the state of the U.S. recovery? And you might need to unmute yourself before you can give me the answer on that, because we're trying to put all these things together. But what do you see out there right now?
Well, Zach, that was framed very well. I think the quick answer is it's mixed. You go industry by industry. You know, some of these high tech industries that are really paying off for the aversion to going back to real estate sites and working from home instead, and things you can do from your own home or from remote locations are prospering. They're even aggregating their advantages over other such industries, whereas more traditional industries such as restaurants, hotels, airlines, real estate are just suffering. And I would also say there's a deep philosophical divide in our country right now, which I would view as unhealthy. I think we've gotten a lot more knowledge about the virus than we had 6 months ago. We know who's most vulnerable. Those people should continue to stay in a low profile and get out as little as possible. And everybody else needs to get back to work. And when you were talking about unemployment statistics and wage statistics, there's a real split between states that have gotten their people back to work and states that are still in the bunker. And I think there's a lot of political basis for states that are still in the bunker. And I think it's very unhealthy, and it's very bad for the common man and woman, the worker bee. And I think they need to change their policies. They're all waiting for pennies from heaven to come down from Washington, and that'll blow an even bigger hole in our federal debt and our annual deficit. And I think that's bad policy. I think some additional relief is warranted, but I think we need to get people back to work in every state, not just states that are taking a chance on that. We know how to protect the people most vulnerable, and everybody else needs to get back to work.
Yeah, I mean, I hear you on getting people back to work, but I think some of these statistics coming out here might show that the demand might not be there, at least in these hardest hit sectors. When you think about airlines, people not traveling, hotel stays, I mean, it's not surprising as to why Hawaii might be leading the nation when it comes to insured unemployment rates. But when you think about what's going on here, when you look at stocks too, because obviously you want to get your investor take on the volatility that could be up here as we approach the election. I mean, on that front, the data coming in seems to show a recovery that's slowing. That's what economists are seeing. I mean, even the income level we're talking about for August came in line. So economists were expecting that 2.7% drop. They had it at 2.5. But when you think about maybe where equities might be right now, what are you telling people out there for how they should be playing this if we're not expecting a lot out of Washington? We'll see what happens. But it seems like people are becoming a little bit more pessimistic that support's going to be there.
Yeah, that's why I said it was mixed. There's some industries that no matter what you do, they're still going to be suffering because there's just not the fluidity of movement among consumers to warrant them doing better. And there's other industries where people can just get back hard at it. As for equities and investments, if I were investors right now, you've got so much uncertainty going into the election, and the market has been relatively calm, which is really hard to believe considering all the uncertainty we've got going out there in terms of tax policy, regulatory policy, who's going to control the Senate and the House, so forth and so on. So I would really emphasize right now businesses that investors understand, that pay you a nice dividend while you wait, and where you know you're getting a historically priced equity that is deeply discounted to how it's traded in the past. I would really focus on stocks like that. I wouldn't be momentum oriented at this point because momentum can flip on a dime. And I wouldn't overweight companies that are strongly positioned against the pandemic, just especially those that are 3-4 times the valuations they've been in the past, I would really look for things where you're going to collect a nice dividend while you wait around to see what certainty looks like in 2021.
Hey investors, Zack Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.